What's going on, Smart Money Gang? Welcome back to the channel, man. And I'm back with another video, and you know it's a banger, right? So today we're gonna get into ROIs, guys. So a lot of you guys do not know what an ROI is. You don't understand what it is. It's something that you do need to know, though, guys. You definitely need to know your return on investment, right? As a trader, guys, you want to know these percentages and you want to know these gains because that is how you're compounding and capital. You're putting capital into your account to compound it, to actually make money, to actually take capital out of your account, pay yourself, right, and redo it again. Okay, guys. But this is talk that a lot of people do not like to talk about, guys, and you have to understand that this is all a part of trading, right? So we're going to get into that today. Also, FYI, I am not a financial advisor, guys, so I can't tell you how to spend your money, where to spend your money, or things of that nature. What I do offer, though, is a private mentorship, guys, where I do break down a lot, guys. We got one-on-ones. You have access to me. We do give out premium signals, guys, and we also provide a trading strategy, a trading style that actually works for you. So risk to reward, right? Percentage gains, right? Proper risk management, okay? Methodology, psychology, right? So that you can understand, what you're doing when you're doing it, right? We definitely want it to work around you, right? We don't want to work around the markets or have to worry about going to work, not going to work, and doing all that and worrying about the markets and learning. Well, I provide a earn while you learn service, guys. And like I said, for right now, it's $199.99, and it's a lifetime, uh, and it's a lifetime course, guys. So you'll have access to this information for forever, okay? And you better go ahead and get in there before price goes up, right? Basically, I'm going to be sharing information of that sort. So right now, we're actually in my MT5 right now, and as you see, I'm in my monthly, right? So first, I'll go to my weekly. So as you see, I clicked on weekly. I'll go to weekly, right? And then as you see, I'm up $1,400 for the week, right? Right. So if we look at percentage gains on where I started with this account, where this account started at, and where it is right now. So where it started at the beginning of the week and where it is right now, right? We usually calculate this type of number, right? We calculate this type of number, and that's how we determine our ROI, okay? Our return on investment for this week, right? I'll do that number. I'll calculate it from where I started at to the point where I'm at now in profit, and then I'll know how much percentage gain is on my account, right? So now I can click here, and then I can go, okay, let me show you guys. So we're on the monthly. I can go on the monthly right here, right? And then I can click monthly. And then as you can see, for the month, for the whole entire month, I made $8,700, right? So I'm up 8,700. And so what we'll do is we'll calculate from the beginning of the month where I started at, right, all the way to the end of the month, right, to where I'm at right now. And then we'll figure out the percentage gain that I made on my account, right? So this is how you actually compound your account. This is how you actually grow an account. If you're not understanding things of this nature, then you're not compounding your account. You don't understand Forex, and you're not making money, and you're probably not profitable. So you probably joined that 90% of people who are not profitable. And so now that you feel like, hey, Forex, maybe it ain't for me, I don't understand this. No, it's not that it's not for you or you don't understand it. You don't understand that putting in the work, you have to do the work. Your work ethic, you don't understand, right? So that's why it's not for you, because you don't want to put in the same amount of work as it is for the person that you think is for. Okay, guys? So you have to understand that, right? We have to get that psychological and that methodology down pat. So what the whole point of it is, right? The whole starting from why am I doing this? Why do I want to be a Forex trader? Because I want to get a Lamborghini and a mansion really, really fast, or I want to learn something that I can actually build generational wealth off of, actually build, and pass down to my kids, right? And have this in my family, right? So it can go for the long run, the longevity, right? We want to go be doctors and lawyers and all of that. We'll go to school and sacrifice everything. We'll sacrifice debt, having been in debt. We'll sacrifice, spending time with family to go to school to be able to learn this craft, and which is nothing wrong with that. So continue to do that. And if you are, in one of those fields where, we need you guys, Of course we love you, and I hope that you love what you're doing with a passion and you're not chasing the money. Okay, guys. So that's the same thing that goes with Forex, right? We have to be aware. We have to hold ourselves accountable for what we think, our actions, everything like that, right, guys? So by that being said, I'm going to share the screen and I'm going to go over some fundamental education for you guys, right? So all this is knowledge, things that we should be aware of, we should know about. Okay. So like I said, I gave you my side, my opinion of it all right at the first beginning. So if you like a video like this, all I need you to do is like, share, subscribe, tell a friend and tell a friend, and then let me know down in the comments, were you aware of this? Was this helpful, right? Was this very informational for you? Would you start looking at your account as percentage gains, percentage wise, instead of money? Hey, you know, I got $100 to risk for today. I only have $100 in my account. I don't want to risk the whole $100, but I do also want to make $100. So you want to make $100 turn into $100. First off, that's a 1-to-1 risk to reward, right? If you're trying to do that, right? So that means you have to risk 100, right, to even make the 100. So that means you have to risk that whole $100, right? So is that logical? Is that realistic, right? That you want to take your account up 100%, right, off of, right, off of your initial investment. So your ROI should be just off the roof, right, through the roof, because you know that reward ratio is like outstanding, right? If you want to do that and you know how to do that, then you know, be my guest, right? But understand that that is a lack of risk management, because you're risking the whole 100% of your account, right? So you risk the whole 100% of your account and you're wrong and you lose. That's the quickest way to blow your account, guys. You just got a formula that blows accounts. You need to just, hey, you know what? Make a YouTube video as I'm doing. Go to Zoom, click on Zoom, make a link, record it, right? Off your computer and say, hey, you know, the quickest way to blow my account is to take my account up 100%, because first of all, my risk to reward has to be on point. I'm only doing a 1-to-1. I'm risking 100 to make the 100, right? We're not going to take baby steps, right? Maybe risk 10% of your account so that now you can limit yourself to 10 trades, right? Or, hey, I'm going to risk 5% of my account. Now I limit myself. Now I have 20 trades, right? We have to figure out some sort of formula that makes sense, not the formula that does not make sense, right? We all understand that, you know, we want to build our account, but imagine if you had 10K in your account, and would your goal be the same exact goal to take your account up 100% to you know, to 20,000, right? Which is not saying that you can't do it, guys. We know that you can do it, but with the proper knowledge, you can do that, right? And if you don't know that, and you know in your mind you don't know that, because nobody knows if you know that or not, but you and God, right? So if you know that you don't know that, then therefore you need to come back to reality, sit down, go over this, and understand, you know, you know, what, you know, why, my whole reasoning why, guys. Why would you want to take it up that amount, right? Why would you want to risk that whole 10,000? Because if you lose, you're going to lose the whole 10,000. And why would you want that 1-to-1 risk to reward ratio? Because you have to be absolutely 100% right. And we all know that the market move how it moves. Is no one going to be 100% right. So, uh, like I said, I can take you guys through a couple of my trades. I did win a lot on these, but I'm gonna show you some losses, guys. A lot of people don't want to do that. So let me see. Uh, let me show you guys some losses. Let me stop the share really, really fast. All right. So, you know, a lot of people don't understand that it's not all about winning. You're not going to win every trade, right? Now we're going to start at the top. Let me get this clear for you guys right up in here. Okay, we right up in here somewhere. Let me get that a little bit clear for you guys. Okay, so we start from the top and we're just gonna trail her down. We're just gonna trail her down. Uh, okay, so that way, that didn't do it. That I know it looked like I win a lot. There go my two losses right there. You see those losses, but it wasn't nothing I couldn't get back. See that win right there under it? Recovered from that loss. Okay, so you got to understand that you're not gonna have a perfect winning record, even though out of all these trades, out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I'm gonna count the losing ones too. 12, 13, 13, 14, 15, 16, 17, 18, 19, right? 20, 21, 22, 23, 24, 25, 26. So out of 26 trades throughout the whole month, that's dang near trading every single trading day, guys. That's trading every single trading day throughout the month, right? because we can't trade over the weekends, right? So, you know, every single trade off of one pair, guys, I made $8,000 off one pair. So it's not always about switching the pairs up, 100 pairs, but out of 26 trades, I lost 2 trades, guys. I lost 2 trades, guys. So look at my risk to reward, and then we can add up my total amount, and then we can add up from where it started at, and then I can find my ROI for the whole entire month, guys. So yes, it was a great month. Of course, for annually, we can't do that yet because we're not at the end of the year. Now I can start from maybe January to July or to June, right? Or to now, and then I can actually do that. So I can get like my half month or quarterly, whatever you want to call that, right? But right now I'm just gonna do my weekly and my monthly, and then I'm gonna, and then we're about to go over their side, right? We're gonna go over the actual information off Google. So what is ROI, right? Return on investments, right, guys? So you need to know this. So if somebody asks you this, guys, you're gonna be like, hey, guess what? Hey, Ken is my mentor off YouTube, and he already put me hip on ROI, right? So return of investment, I'm the first to do it, guys. All right, so it represents the benefits or return of an investment, right? Divided by the investment cost. ROI as a financial ratio evaluates the profitability of an investment. Return on investments can be expressed as a ratio or percentage. For example, the more significant the percentage, the better the investment, right? It provides an easily usable formula that has many practical uses. For example, one can compare the return on investment from a range or not generally compare assets. Therefore, one could compare the stock market's performance with a new niche startup by merely plugging the correct financials into the return on investment equation. So you notice, guys, I always talk about formulas. So like we probably was mad at algebra and geometry and stuff like that. We're not going to need to use that. Well, sorry to say, man, I know I was a fan of that lie for years. We have to unlearn to relearn, guys. They lied to us, man. All I'm gonna say is focus up, young king, focus up, young queen. But like I said, unlearn to relearn, and if you want that private mentorship, I'm telling you, I'm the way to go, guys, because I'm going to give it to you for free. So tell a friend to tell a friend to come on through and lock in. Come on, man. It's the biggest investment in the change of your life. It's not too late. So what is ROI in trading? ROI in trading represents the ratio of money gained or lost on an investment relative to the investment amount of money, right? So if the trader invests 1,000 into his account, right? So this is that initial investment, 1,000. It's not that you lost that 1,000, blew your account, kept filling it up, kept filling it up. It's that initial investment that you're still negative in your account for, right? So if you go back to your past, you know that you're still negative, right? You notice that because you added money, you kept adding money. The goal is to win money, take the money off, pay yourself, put it into your bank account, and then use that money that's already there to make more, right? You have to learn how to manage. If you can't manage the small account, what makes you think you're going to manage the large account, guys? And I'm telling you, I used to try to rabbit race, or I used to try to be the hare, right? Instead of the turtle, guys. The turtle going to remain on the straight path. It's going to get there when it get there. The rabbit going to hop, boom, look back, look around, get hyped by the excitement. You know what I mean? We can go look at many of stories, right? You're gonna go get hyped by the excitement, gonna be on Instagram, Facebook, all social medias. You're gonna be hyped off the excitement. Yeah, I took that same trade. You hype, yeah, I've been in the ring, I've been here for a minute, right? And then you played around and then you lost that fight, right? So you got to look at it in all type of aspects of life, bro, when you're dealing with this, guys. And you have to understand that we that initial investment, we need that back, guys. So no matter how much you've been winning after you already put initial investment into account, you always want to make that initial investment back positive before you can ever say you won anything off Forex, guys. So now how many times you blowed your account? If you still blowed your account in $10,000 and you still ain't made 10,000 in positive yet, you're still in the negative, guys. You have to remember that. So once we start understanding this part of trading, then we'll start getting somewhere. We'll be able to compound. We'll be able to see our gains. We'll be able to see our percentage gains, right? So back to it, man. If the trader invested 1,000 in his account and he made $400 profit, right? Then the return of investment in trading would be 400 to 1,000, which equals 0.4, right? Or 40%, right? So Your initial investment was 1,000. You took the account up to 1,400. Guess what? You initially took that account up 40%. Your return on investment is 40%. I don't care if you did it in one day. If you took that 1,000 to 1,400 that one day, your return on investment was 40%, guys. So if they telling you that they want to use percentage gains and percentage wise, and if you see in the stock market, and if you seeing Forex, right, the foreign exchange market, you're seeing the gains and percentages, right, on trading view, things of that nature, right? You're seeing that, hey, prices going up in a percentage, prices going down in a percentage. Guys, you already on another level. You're already looking at the market in a different manner, in a different view, right? So that means that's going to put you 10 steps ahead of somebody that's always worried about, hey, I turned $100 to $50. I'm up 150 and worrying about the money. And when you can be like, hey, you up 50% on your account, that will make that's the whole difference. Because no matter if you had a large account, small account, right, mediocre account, right, if you can be able to take a small account of 50%, what could you do with a large account? Take the large account of 50%, guys, because you're going to be thinking not money wise, but percentage wise. So that way you're going to have a whole risk management over everyone. And that puts you in the lead. All right. So return on investment equation. All right. So to calculate this, the amount earned is dividends by the cost of the investment. So the result is expressed as the return of of investment ratio. Mathematically, the return on investment equation goes as follows, okay? So ROI, earnings from investment, right? Then the cost of the investment, right? So if we hustlers, we already understand this, bro. This is simple for us, man. This is the legit way to go now. If you a hustler, bro, this is the legit way to go now. If you love numbers, you love money, this is the legit way to go now, guys. Listen, no matter if you got a business, this is the legit way to go, because at the end of the day, you'll be able to snatch out whatever you need to be able to provide for that business, to provide for that raps career, right? To provide for that training coach career, to provide for, your students, or to provide for, your nonprofit organization that you want to start up, guys. Use this right here, man. This is the strongest muscle we got. We can go to the gym all day. If you're not exercising this at the library, guess what? The person that's at the library way stronger than you, mentally, physically, emotionally, spiritually, because guess what? This knowledge right here, this right here is the strongest thing you can use. Guess what? Even if you fight and you in the ring, right? A fighter that's using his emotion gonna lose the battle, guys. And the fighter that's using his brain is going to think before moving, calculate every step, and win the battle, guys, because they're going to win by numbers. They're going to win by everything else. You get what I'm saying? So understand this, man. It's a number game, but it's percentage wise, man. So I'm not going to stress that no more. I guess you guys will get it when we get it. So sample return of investment, right? So it say next, one must consider how to calculate a return on investment practically, right? To this end, a return on investment example should suffice. I don't know. But John, if you know, let me know, man. But John invested 1,000 in Nice Shoe Incorporate, right, in 2010. Today he wishes to sell those shares, right? And he sells them for a total of 1,400. If he wants to know his return on investment, John would first have to calculate his profits, right? So he would have to see how much he made, right, for the month. That's why I was showing you guys the weekly and the month. I got to see how much I made, right? So then after I see how much I made, I want to see where I started. All right. So look, investment, right? So John would first have to to calculate his profit. This can be done by subtracting, right, his initial investment. Okay, so that's how much that he actually started with. All right. So his initial investment value, right? So and the cost of his investment. All right. So his investment value and the cost of his investment, right? So how much he made, and then how much he actually started with. So he'll take the 1,400, which he started with, and then he'll subtract the 1,000, which he actually invested to make the $400, right? So if you subtract that, it equals $400. All right. So next, the gain is divided to get the investment of 400 divided by 1,000, right? Which equals 40%. Therefore, John's return on investment is 40%, guys, right? So These equations may be made much simpler with the use of online return on investment calculators, right? So we got things of that nature so that you can go to percentage wise. You don't have to go through all of this. We can just actually simply take these equations, these numbers, plug them in, and then with that formula, we should be able to understand what we're trying to do, right? So that way we can actually make goals, right? This month I want to return a 50%, or I want to be up to 10%, or I want to be up 100%, or I want to be up 60%. Rather, so how much money, guys? Okay. So these equations may be made much simpler with the okay, boom, 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 boom. All right. This can make life simpler, right? When comparing multiple investments, right? Opportunities simultaneously, allowing for a more straightforward path to seeing the opportunity costs associated with a um, respective business path. All right. So this is like the calculator right here that they provide for you guys to use, and then you guys can actually put your, your earnings from investments and things of that nature. So right here, I'm going to type in. All right. So we're going to do for the month. So I'm going to type in. All right, 8704, right? 0.00. Okay. So then I could put my invested money in trading, and then I could say, okay, well, I invested 10,000. All right. And so let me see. How much did hmm. So I don't know why it ain't working, guys, because they said it would work, man. Oh, maybe they only gonna do it for John's. They want me to put John investment. This is only an example, guys. But anyways, right? So the reasonable average. So basically, pretty much, man, my account is up 87%. So my ROI for this month, since I made 8,700, for the month, my ROI is 87%, guys. Okay. So it's just simple. I'll just do it like that, right? Started out, initial investment was 10,000. I took the account up to 18,704. All right. So now I took the account up to 18,704. I mean 8,704. I did the math, right? I put in all the plugins and things of that nature, the same thing as they did. So I put the 10K, or I put my the investment in the 8,000 slash 10,000, right? And it equals, right, 8.7%, right? So I mean 0.8, right? 7%. So we took the account up 87%. All right. So simple math, right? Simple math. All right. So what is a reasonable average rate of return on investment? The reasonable average rate of return of investment is different from industry to industry, right? Globally, and excellent average rates or returns on asset is above, excuse me, 50%. Generally, any value that comes out of a return of investment equation as positive is considered a good return. Nonetheless, the important remains on evaluating all options so that the investment chosen outweighs its associated opportunity cost. The opportunity cost is defined as the next best option that is foregone with the purchase of any good, service, or asset, right? So consider this. John, for example, earlier had the opportunity of purchasing shares in Nice Shirts Incorporated for the same 1,000 in investment. His return on investment would have equated to 50% over the same period. Therefore, John's opportunity cost was higher than the profit, right, he made buying shares in Nice Shoes Incorporated. From this, one can see the opportunity cost plays a vital role in decision making. A comprehension return of investment analysts may help dramatically aid this because, as stated earlier, the equation provides a reasonable basis for numerical comparisons. What is the average ROI on stocks or Forex trading and the industry in the trading industry on ROI above 20% is an excellent return on investment. Yearly average day trading ROI is above 15%, guys. So even if you're just getting 15% to 20% gains, guys, especially yearly around, if you was to even make 15%, like Warren Buffett, I think he's only like 20% a year. He makes at least 20% a year, right? He's a billionaire, okay? So 15% is also good. Excellent. It's excellent. It's something that's sustainable. It's something that you can do consistently. You can keep being 15% consistently, right? 80%, 90%, 100%, even over 50%. That's not something that's sustainable, guys. That's not something that's going to happen all the time, every time. So, imagine long run, right? Wins and losses, baby. Wins and losses. All right. So return on investment versus return of investment. While doing these calculations, it is essential to keep in mind that a return on investment does not necessarily mean a return. So a return on investment does not necessarily mean a return on investment. Return on investment is speculated. Return of investment is definite. All right, cold hard cash in your hand, the end goal, right? So of any investor must be achieved return on investment. It's just like, so we already understand that return on investment is what, is the money that's calculated up. We understand that, right? So by the time, you get it out, Bitcoin, you get it out your bank, you're done getting taxed, even when after you pay the taxes, right? That's the raw part of it, the return of investment. So don't get it all twisted, right? We got ROI, right? Return of investment, right? And then return on investment. But return of investment is hard cash. How much you got in your wallet, when you take it out, when you liquidate it, you know what I'm saying? You're taking that money out, right? How much money was that? How much money was it, right? How much money was it in cash? Okay. So, limited of the return on investment analysis. Return on investment is a profitability ratio. This means it is supposed to be an aid in decision making of investment opportunities. However, so that it can play a proper role in that situation, it is critical to establish that it does have limits. The equation does not take into account the time between the initial investment and the profits received, guys. So however long it takes you to make this amount of money or whatever, it also takes an effect. Okay, guys, that's what they're saying, basically. So, the equation does not take into account the times between the initial investment and profits received. So it may put assets that have different rates of return in the same category. For example, the return on investment equation will say 20% returns on this in 6 months and in seconds in 2 years. Therefore, the return on investment analysis is not sufficient on its own and must be used right alongside other crucial profitable measures. So basically, if you're taking money off monthly, weekly, we got to understand all this. So the actual cash amount that you really have on hand. All right. Such measures provide a better basis with which to make an investment decision. Example of such calculations would include the present net value, right? So the NPV and the internal rate of return, which is the IRR. So guys, when these people are on your head and they talking to you crazy and they telling you, oh, what's the ROI? Look, you hip to what a net value is, and you hip to what the internal rate of return is, guys. So ask them, hey, what's their NPV? What's their IRR? Right? Get into their head. I bet you they don't know. You feel me? So these are not comprehensive, and further research is suggested before making any crucial decision. Why do you know? Because Ken put you on, and I did it first. Furthermore, the return of investment analysis only provides historical data. This means it cannot be predictor of what an investment may do in the future. So guys, when they're showing you these big old fancy numbers, that's why I told you guys, I just went from the weekly and the month. This is all present, guys. Listen, when they showing you yearly, we don't know how they took it off, right? They can show you $1 million and say, oh, I'm a millionaire, right? They don't fully have $1 million, guys. So mind you, we got taxes on that $1 million, right? We got how that money was pulled off, when it was pulled off, the taxes that it took off, right? When they actually initially got it in hand, so it's probably maybe a little under $250,000, guys. You have to realize all of this and put this into perspective, man. When you're getting big money and you want big money and you want to be rich, it's a lot that come with it besides just that, right? So that's why we need financial literacy, but they don't want to teach us that. That's another subject. That's another subject for after, okay? So just understand that and know that, right? So however, specific implications may be drawn for this. So criticism of evaluating, performance based on ROI includes reject investment opportunities that are profitable for the company, but negative impact on managers' ROI, right? So you got other stuff that you might want to do. You might got sponsorships and things of that nature, right? So that's going to affect what's going on, right? You might be with a prop firm, right? You might only get 70% split profits, right? That affects it, okay? So just understanding this type of information puts you ahead of the game, right? So, be put in charge of business segment that includes committed cost over which a manager has no control over, right? So just different costs of different things, right? Different parts of what it takes to be a Forex trader, different things we might have type of like I said, split profit sharing, things of that nature, right? With different companies, right? Take action that increase ROI in the short run at the expense of the long-term performance. All right. So, guys, listen, when someone asks you these type of questions, man, this is an answer that can never really be answered, right? Because have you stopped trading? Are you done with trading? Or is your trading career steady going on, right? Can you steady get investments? Can you steady get sponsorships? Yes. So remind you guys, when somebody asks you this is a question that really can't be answered. So they just really messing with your mental, guys. Because like I said, it's different factors, different strokes, right? You might get in some type of challenge or event, right? And you might be able to be capable to win 20, 30,000, right? That's still a part of your trade, no matter if you're using a different account. You might be in pass the torch or whatever, right? So guys, your ROI is your business the same way as someone else's bank account is their business, right? So when they ask you what's your ROI, just give them the definition of ROI and then ask them, hey, what's your bank account information? So SMSFXMentors.com, man, I put y'all on first, man. So go ahead and tell them that. Run and tell them that. You know what I'm saying? Come run up a bag with your boy. Private mentorship, SMSFXMentors.com. Let's get it. Gang. I'm first.